Alright, once again I welcome you to Prekani Trading Network. My name is Anya Somodabuchi and I am your coach for today. So get your writing materials ready as we get started in this session. So today we're going to be talking about support and resistance, because it is very, very important that as a trader you understand support and resistance. When it comes to trading, forex is the business of price, because traders are in to get into the market at the best price available that can guarantee a profit. So right now, let's take a look at support and resistance and how we can narrow them down from the higher perspective to the lower time frame. We don't just make content for content's sake. Our content is actually tailored to solve a particular problem, which is why we're bringing clarity in the trading space. So get your writing materials ready and let's get to business. In trading, every low is regarded as a support. Every high is regarded as a resistance. Alright? Every low is regarded as a support. Every high is regarded as a resistance. Support, resistance, support, resistance. Same thing in a downtrend. Every low in a downtrend is a support. Every high is a resistance. Support, resistance, support, resistance, support. So if you really want to understand everything about this concept, please do well to watch the part 1 of this video and then you can move over to the part 2. That way you have better understanding. Alright, so the video after this particular one, no, the video before this particular video I'm making right now is actually the part 1 on our YouTube channel. Alright, go there. There I was able to tell the full definition and meaning and the psychology behind support and resistance. So right here I want to show you how we can print this same thing into our daily trading activities to be able to understand what the market is all about. Is that clear? So right here, every low is a support. Another word for support is floor. Another word for resistance is ceiling. Another word for resistance again can also be seen as a swing high, and another word for support can also be a swing low. But generally, we'd say support and resistance. Is that clear? So here we could see that a high is known as a resistance, low is a support, resistance, support, resistance, support, resistance, support, resistance, support, resistance, support, resistance. So we have a low. This is a low. All right. That's a low. And then we have the resistance as our high. All right. And then we have another concept known as the lower low. All right, lower low. I will have a concept known as the higher low. So in this scenario, this is a higher low. This is a higher low, and we have a higher high. So this is a higher low, and that's a higher high. All right. And here again is another higher low, and this one again is a higher high. All right. So just take your time, you understand. Okay. And then same way we have another higher low. So when price is making higher highs and higher lows, we could refer this as the uptrend. All right. So you can go and watch my video on market structure to understand better, and then you come back to this video to continue, right? So and then again, this is also a higher high. The reason why this is a higher high is because this high is actually higher than the previous high. Same way this high is higher than the previous high, and same way this high is higher than this previous high. Then we have a higher low because this low is higher than the previous low. This low here is higher than the previous low, and this other low is higher than the previous low. So when market is making series of higher highs and higher lows, higher highs and higher lows, we can say that the market is an uptrending market. And then when market starts making series of what? Lower highs and lower low, lower highs and lower low, we could possibly say what? That price is making what? A series of you can say that the market is in a downtrend. We have lower low, and we have lower high. Lower high. All right. So we have a lower low because this particular low you're seeing here is lower than this low. Is that clear? It's lower than this low. All right. And then again, we have a lower high because this high is lower than the previous high. Just that same way, when you have this kind of market structure, you say that you are in a downtrending market structure. So price will always make what? A lower high in a downtrending market structure, and at the same time make what? A lower low in a downtrending market structure. Now the reason why I'm breaking this down is so that you understand. That is why you need to pay attention. Take your time. Knowledge is a product of time investment. You have to take your time, because I'm not here to say the things that you are going to always enjoy, because no learning is easy. All right. So you have to understand that you are learning a skill that has the capacity to pay you for the rest of your life. Okay. So that is why you need to pay attention to understand the basic concept of market structure. Okay. When we're talking about support and resistance. So now this is just how it is. You can refer this low as a support, higher low as a support, higher low as a support, higher low as a support. Same way you can also call the higher highs as resistance, and then you can also refer the lower lows as your support, the lower lows as support, and then the lower highs as a resistance. I believe this is clear right now. Okay, so now the next question is this. Sir, how do I know when a market is moving from an uptrending market structure to a downtrending market structure? How you know is very simple, and please, this law is universal. This is a law. It is applicable in all tradable instruments. All right. Now, when you have price moving from a resistance, breaking highs, that is to say, market made a high, made a low, made a higher high, made a higher low, higher high, higher low, higher high, higher low, higher high, higher low. and a higher high. Now, the moment price breaks the support, the moment price comes and breaks the support, this particular support, all right, price comes, for instance, takes away the support, and in most cases, two levels of support zones, or in most cases one level of support zone. In fact, whenever you notice that price has broken a support level, all right, and could not continue to break the resistance, you cannot say that what the price is set for reversals, because apparently when a low cannot break a resistance, that low will definitely be taken away by price. So that becomes what the very beginning of a downtrend. And as long as market keeps breaking support, it's always going to signify a continuation of a downtrend until what a valid resistance level is broken. That is when price can switch to an uptrend. Is that clear? So now I'm going to be explaining this in the chart, but I want you to really understand what I am saying right now. Okay, let me go ahead and clear everything and let me explain again. Now, in a situation where price is making a high and a low, a higher high and a higher low, a higher high and a higher low, a higher high and a higher low, higher highs, higher lows, higher highs, and then market comes and breaks the low, all right, once market breaks this support, that is an indication for what the beginning of a reversal. Then after the retracement, when price retraces backward, all right, and breaks another low, that is when you can now establish what a downtrend. Then you notice that price will keep what breaking those levels continuously until we have a break of a valid resistance. All right, so now we have two types of resistances and two types of support. We have what we call a valid or a strong resistance, and we have what we call a valid or a strong support. Now when you say valid or strong resistance, you're talking about the same thing. Then we talk about dynamic support or dynamic resistance, which are internal support or internal resistance, or you can refer it as a weak support. Just like we have strong support, we also have weak support. Just like the way we have strong resistance, we also have weak resistance. All right, so I'm going to explain that very quickly. Please, you need to watch this video multiple times to understand what I'm saying. Okay, now a strong support is a support that led to a break of a resistance. A support that led to a break of resistance, or a support that keeps breaking resistance, is a valid support area. For instance, all these supports are valid support areas. They are all valid support. This support is a valid support. This support is a valid support. Why? Because this support pushed to break resistance. This other support here pushed to break a resistance, and then this other support pushed to break a resistance. So that is why they are called valid support, because they help to tell us the continuation of an uptrend. As long as price keeps breaking resistance, it indicates continuation of the uptrend. Do you understand? And then this other support you're seeing here pushed to break a resistance. Do you understand now? So this is referred to what as a valid support or a strong support. Now, let me clean very quickly. Then a support that is not a strong support, or that is referred as a weak support, are support areas that cannot break an external resistance or a strong resistance. For instance, let's just assume that price decided to come, do something like this. All right, do something like this. Now, these are internal support areas that you cannot consider as a strong level of support, because it has not pushed to break resistance. So usually what price would do in most cases is that price can come and break that. Price broke this support area, does not mean that the market wants to continue in a downtrend. It simply means that since it is a weak support, price will have to create a strong resistance that can come and break those weak support area in order to engineer liquidity that will break the external resistance, making this support making this support level here a strong support, because this is the support that pushed to the break of resistance. So this is why most traders who are not yet experienced, used to feel like when an internal support level is broken, that support level, is enough to decide a change of trend. This same thing is also applicable for a resistance level. Now let me explain very quickly. Okay, in a situation, I'm going to use the chart to explain, but right now let me use this graph to really draw and explain to your understanding why these things have to be on check before making any trading decision. You have to identify the key levels of support and resistance that has been broken to determine a trend. Now, if for instance price does this and breaks a resistance, once it breaks a resistance, apparently we will know that this is a strong support. Okay, and price continues to break resistance, you will know that okay, this is a strong support because a resistance was broken. As long as price keeps breaking a resistance, you will now know that okay, this is a strong this area is a strong support because this resistance was broken. All right, and price keeps breaking resistance. All right, now when you hear the word break, it simply means the candles moving across the resistance levels. All right, you can see that how price keeps breaking our resistance zones. You understand? Price keeps breaking our resistance zones. Okay, and then all these support that broke these resistances are considered strong levels of support. All these support that broke resistances are considered strong levels of what? Support. So where are the support that broke those resistance zone? This support here, they are considered strong support levels. Why? If somebody should ask you why are they strong support, you say because they pioneered a break of what? A resistance, which signifies the continuation of an uptrend. Is that clear? Then if you notice something like this, most times traders make this mistake. They will see a support and then price decides to do something like this, move up and couldn't break a resistance and then move backward to break the support. They will think that this support is the support that has been broken to signify a downtrend. No, in most cases this is always done, all right, whenever market wants to retrace into a strong level of demand. That is when you see setups like this happen. So most of the times traders judge these things wrongly and they start to look for sales position, especially when they go to identify a supply level. They may think that okay, when price retraces back into supply, we are likely going to sell, not knowing that a strong support has not been taken out. Are you getting the point now? The only way you can decide a downtrend is when this strong support is taken out. And what do I mean by taken out? When price comes and breaks through those support levels, that is when you can now say, okay, we are in a downtrend. It means that price will do what? Price will definitely retrace to grab either any significant zones like the support zones, which is also known as the breaker block, all right, or supply, and continues to drop. So this is why a lot of traders make mistake when identifying the beginning of a trend. What do I mean by the beginning of a trend? Whenever price moves from a point of an uptrend to a reversal mode. Now, before now, we used to call that reversals. When price moves from an uptrend to a downtrend, and when it moves from a downtrend to an uptrend, you can call that reversals. But in today's technical terms, we can say that you want to know the point where price have changed character. We call it change of character, or we call it change of market trend, or we call it change of trend, or change of market intent. A lot of different narrative has been created to support the understanding of reversals. Do you understand? So now, as a trader, please, whenever you notice any setup like this, don't consider it a downtrend yet until a strong level of support is broken. As long as a strong level of support is not broken, please, that market will still continue in an uptrend. Am I communicating? I hope I am making sense. So this market will still continue. This is why most times traders are confused. They say, I thought this market was supposed to sell. I thought you said anytime there is a break of support, it signifies a downtrend or the beginning of a downtrend. No, sir. It does not do that except key levels are broken. Except key levels are broken. Do you understand? The same way, the same law is applicable for what? A downtrend. So right now, we are still in an uptrend. As long as price keeps breaking what? Resistance levels, you can say that we are still in an uptrend. You notice that price will do what? Price would come, all right, and still continue. Then the moment price does something like this, that is when you can now begin to consider it as a change of trend or a change of character. Why? Because this very support level, all right, has led to the break of this resistance. Please, this support level must have come from a point of inducement. That is going to be the part 3 of this class. All right, I don't want to make this class too lengthy. That's going to be the part 3 of support and resistance, so that you understand better. Okay, to know, so this low must have come from a place of inducement to take out this high. The moment price breaks this support, that is when we can now decide that the market has shifted trend. All right, remember that the market moves in wave. We have impulsive wave, retracement, impulsive wave, retracement, impulsive wave, retracement. Same way in a downtrend too. All right, we have impulsive wave, retracement, impulsive wave, retracement. Is that clear? So let me quickly take that out. So once this has been noticed, all you need to do is to wait for what? To wait for a retracement into key level of supply, and then or premium zone, and then you take a trade for a sell. As long as price keeps breaking support, it will continue to go down. As long as it keeps breaking support, it will continue to go down. Then a reversal is spotted immediately. A strong resistance. Now, how do you know a strong resistance? The resistance that leads to the break of support. The same way you know a strong level of support when a support breaks a resistance. That same way, a strong resistance is known when a resistance breaks support. Resistance breaks support. Resistance breaks support. And if price breaks through a resistance, remember, before you can consider this as a change of trend, or a reversal point, or a change of character, this resistance that broke the support must come from a point of what? Inducement. Meaning that this resistance must have already taken out inducement of this level, which I'm going to teach in part 3. And then market has to what? Once price breaks it, you will now know that the market has shifted trend again to an uptrend. Repeating the same pattern. And that is why they say forex trading is all about pattern trading. You have to learn to what? To understand the patterns in the market. Everything that has to do with trading has to do with pattern. Any pattern you see that you can understand and observe that has repeatedly occurred in the market over the years can also be observed to a point where you can call it a strategy, especially when you can be able to identify your risk level and your profit level. Am I communicating? And also know the psychology or the market sentiment that created such patterns. So this is how you can comfortably trade the market, just by understanding market structure. Is that clear? So the next video, which is going to be the part 3 of this video, I'm going to explain using the chart how you can comfortably trade using the support and resistance. But I'm not here to teach you a strategy. When you want to learn any skill, you have to consciously invest into those skills, and that is why we have our platform. You can always reach us at or connect with us at www.prekani.com. Is that clear? Go there and make payments to any of our products and services. We have over 15 products and services that has to do with trading. The problem with most persons feels like, since they are not making money in forex trading, they just give up and conclude that trading does not work. You don't even know if you're going to make money in crypto trading. You don't know if you're going to make money trading the crude oil. You don't know if you're going to make money trading gold, commodity trading. It's all about mentorship, knowing the right psychology that is applicable to these tradable assets. Do you understand? You don't even know if you're going to make money trading the stocks, US stocks, Canadian stocks, the Chinese stocks, the Nigerian stocks. You don't even know. Do you understand? You just conclude that this doesn't work because you've not tested different rivers to be able to know the one you can swim. Do you understand? So that is why you need mentorship. These videos, this content that I create, I create it as a way of keeping you informed with the information you need to know. But when it comes to the real secret that has to do with trading success, you need a mentor that can guide you through. Is that clear? So you can always check us at prekani.com, choose your product and services, make your payment, and then we'll have you trained. And we're going to also enroll you in our 1-year mentorship. 1-year mentorship, because our mission here is not to gather crowd. Our mission is to ensure that you become a profitable trader. My name still remains Anyaso Madabuchi, and I'm glad that you enjoyed this video. Bye for now, and get ready for the part 3 of this video. Thank you so much. I'll see you in the next video. Bye for now.